Hi, I'm Jess from Invest National. We're here down at Eagle Street Pier, bringing you the finance news for June. This episode, we crossed the 12-month milestone. There is so much to report, so we'll just give you the information we feel is most relevant to you. So let's get into it. Well, for the first time in 29 years, Treasurer Josh Frydenberg has declared Australia is in recession. All recessions are not created equally, and it has been noted across the globe that Australia's economic recovery has been outperforming the rest of the world. So while the rest of the world has been discussing reopening, Australia has already begun. The ASX is now up 35% since its low point in March. DIY traders stranded at home have also been getting in on the action. The number of new trading accounts being opened has tripled since March. ASIC warns that inexperienced day traders should take caution and not risk trading more money than they can afford to lose. Talk of a potential travel bubble between Australia and New Zealand, as well as a general optimism in travel returning, has seen the tourism and travel shares soar. Since March 19th, the Qantas share price has risen nearly 130% from its low of $2.03. We have seen a similar story with Flight Centre and Webjet. The Organisation for Economic Cooperation and Development, which studies and reports on countries' international financial progress, has forecast that Australia could limit the loss of GDP to 5% and keep unemployment below 8% if we can stave off a second wave of infections. In retail news, Harvey Norman sales have soared 17.5%. The retail giant had closed in every country except Australia. First selling freezers when the pandemic first set in, then computers for homeschooling, then homewares. Their sales have soared beyond expectation. Consumer confidence is also doing really well, currently at 16%, just 2% below the 5-month average. As for property, prices so far remain largely unaffected. Currently, it seems there's more good news than bad news. The CoreLogic Home Value Index, covering the 8 major capital cities, declined a mere 0.5% in May, the first monthly fall since June last year. But Australia's property market looks like it'll be in for a softer landing than projected by property reporters. Considering the weak economic conditions associated with the pandemic, a fall of less than 0.5% in housing values over the month shows the drop of housing values could be milder than first expected. Our low interest rate environment is one factor helping to support the housing markets, with many owner-occupiers paying mortgage rates less than 3% and investors experiencing the lowest mortgage rate in history. That's been your month in a minute. Thank you so much for joining us. If you do need anything, please feel free to call us. See you next month.